Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars Fontin, and this week we have another live week again. So thanks for joining me today. Oh my God, you are live in the chat already, rushing in with questions. That's what I like. So you are invited always to participate in this live session. Latest at the end, I will pay attention to your questions and try to answer as best as I can. But upfront, as always, let's do some cycle analysis live on some current data sets. It's not scripted, it's just live doing some cycle analysis on financial assets. That's what we're doing here week by week. This week, I would like to have a look at the current main markets. So global stock markets, let's use the US equities. S&P, I want to have a look at sentiment data sets. So let's use weekly sentiment data. I like using from the Federal Reserve, which is available as free data set on a weekly time series. Let's analyze the volatility index, which is a kind of stress level in financial data sets. So let's see if we can find cycles there. And for sure then on the global markets. So that's what I want to do with you together for the first, let's say 20 minutes, 25 minutes, current cycle analysis on the stock markets. And then I hope I can even go through all of your questions. Edward, be patient. Question 1, 2, 3, 4, 5. But okay, you're welcome. That's the purpose of the session. So let's get it started. Let's look into current market action. I need to clean up a little bit my screen here. So give me a second. But it should look good that way. Yeah, let's start with weekly cycle analysis first here on that screen. So I will start with the weekly long-term analysis first. What we see here is the weekly S&P with the current upswing here, and at the bottom the current spectrum of the weekly. So first, what pops up to my mind is the clear peak of this cycle with a length of 181 days. And I like that cycle, especially because it's quite clear that this is the most important one here. If you look to the left, that there's no cycle to the left, no cycle to the right with that high, and we have a clear silhouette of this sharp cycle peak in the spectrum. It's quite different looking to that one here. So this has a very flat plateau. And in comparison, this has a very sharp peak in the overall spectrum. And the 181 days cycle is also automatically ranked by our algorithm, which helps you to identify the most important cycles. So said that, it's quite easy to pick this cycle here for analysis. And you know that this cycle is there since, or at least we monitor this cycle since October 2021. Yeah, it was already shown here at this top, and it showed us the top. So I'm always referring to that because if it's still in the data, if it's still seen, we should still pay attention to it. So if we zoom in, we know that we have failed, to project the exact bottom here. So the bottom came in October last year, depends a little bit on where you look. So this is very early timing. If you see it from that timing here, you could argue it's in the low region of this long-term cycle, but it's really early. So this point was not expected to show up that early in the cycle length. I mean, in hindsight, we are always better prepared in regards to data, but and I would not call it as an argumentation, but what on long-term cycles might be interesting from a researcher's point of view, you know that we can apply a cycle skew, which is in financial markets, you almost always have skewed cycles. I missed that one, to be honest, so it's no excuse here. It's just reminding myself on the research of cycle skew, which you see here had a much better shape in regards to the peaks and the tops here, and the bottom then was expecting more early, or at least here the March low we've seen. It's a much better shape here. The relation to cycle skewness, so what you see here on the chart, there's a lot of research out there which assumes that financial data sets are skewed in that way, and there's the reason for this skew. So the downturns are shorter, in amount of time than the upswing cycle phase, So if you just compare the length of the downswing phase to the upswing phase, that's what the skew is about. That this period here is much shorter, so the downswing of that cycle is much shorter than the upswing. However, it is still the same 181 weeks cycle we're seeing here, So even though we just applied the skew, the cycle length is the same. So just let's remove the skewness. Let's just have a look here. So it's March 25, and this is October 21. I'm just measuring here from March 25 to the cycle length, and this is this is October 21, and this is March 25. That period here from here to here. And I will now just disable the skew factor just to see about what the skew is about, and just update the chart so that you see wait here, I need to, okay, now the skew is out here. So the length from here to here is still the 180 bars. So this is, but it shifted a little bit to the right side here. So I will get back to your questions in a second. I'm a little bit maybe sidetracked by just reading it on time, but we will get through all these cycles here. So from the long-term weekly perspective, we are now zooming in here in this upswing cycle also from the long-term series, if this is valid. So if this is confirmed just from the long-term cycles, we are due to a longer upswing cycle. As we are still in this period here, we still have a risk of another down leg here, maybe into the October-November period, and then kicking off the longer upswing cycle. So we can't rule out that risk here just based on this long-term cycle, and therefore we always need to switch to the shorter-term cycles. So let's therefore go through the maybe another reason not to rule that out is if you add the FLD for the 181 weeks, so it's around 90. So I've just added here the FLD based on 90 weeks, which is the green projection here. And if you see, we have not confirmed the upswing projection, which would require that we cross above the green line here. I mean, if we keep going sideways or keep hold here, latest, I think during September, end of August, September, if we don't pull back, we will reach that point, and then the FLD confirms also that the upswing is in force, but this has not happened yet. So we are below, the FLD. It might shift really in September when this comes down, so the close might be around the corner, or a latest touch here and then breakdown. But therefore we need to switch to the daily cycle. So let's do the same analysis on the daily. Let me just move out. So this is the daily chart here. I'm zooming in. Here the spectrum has one or two obvious choices. So the first one is here again a length of 82 trading days, which is the obvious cycle to pick here from that list, also shown up here in our list of cycles. So picking that one. 82, we had the discussion in an Insight group. I would highlight moving back to our Cycles magazine, just grabbing it there if you're not aware about that. The Cycles magazine is free and public, so you can go to the magazine, and I think it's the issue number 4, 2021. I would recommend to go there, and there is an article written by Stan Harley. You see here down below. I think it's on page 11. I would just recommend to read it. Time seriousness of stock prices by Stan Harley. It's free available, so just go to the link I'm sharing here, pick that article, and there you will find statistical analysis of different cycle length on the S&P 500. So for the weekly and the daily cycle. And just referencing this article here because, and you see it here on this chart. Let me just try to zoom in here. Yeah, that's what you see from his analysis. It's about trading days, so exactly the screen we're seeing here. And there is the period of 40 days, which references to the harmonic relation 80. So 40 trading days, 80 trading days is just the double of the 40. So we have a high statistical relevance. We discussed this in our Insight group, by the way. But as this article is freely available, I would highlight, reach out to our Cycles magazine, read that article. You will find some information on statistical significance on different cycle length. And this is more or less a confirmation supporting the daily analysis and picking the cycle with a length of 80 here. So that was just a quick reminder. We could also use the 40-day cycle in addition to that. So the 40 days trading day cycle was highlighted. I mean, it does not show up, but if it has a relation to the 80-day cycle, the 80-day cycle is ranked. And if you select and deselect that the tops and bottoms projected by this cycle also in the historical analysis will not change dramatically. So that's interesting. Yeah, go with the 41, add up the 82, so the double, and you see how nicely this cycle length more or less resembles also since the main top, the major swings here in that market. And look where we are from that cycle. Just zooming in here a little bit, or even let's make it even larger. So this 40 something and 80 trading day cycle is currently coming to a topping period. And just repeating, I was thinking that in March, April, there have been the past peak of that cyclic combination. And if you follow this analysis on this channel here, you've seen that mostly I have waited for the top to come in here in March this year, which is from the cycle prediction this top here, which obviously did not happen. And at least this downswing here was just skipped. Then this upswing here was nicely following these 80 trading day cycle. So let's see if the next downswing phase, which now moves into September, so this is a downward projection on the trading day cycle into September, would show up where the other downswing projections worked out quite nicely. So we just skipped one. So it would be interesting to see what happens here. So I think that's a very interesting projection on the daily. That's what I said. On the weekly, we still cannot rule out another down move before we maybe then see the next longer term up leg. But I need to wait, or at least from my perspective, I want to wait now how this cyclic projection resumes. And if we bring in our cyclic tuned RSI indicator here at the bottom, you know that since that point in time, and let's even make it larger again. So here was the first major top in February, March, or in April, where the top was expected. And my assumption was also based because we touched the upper band of this indicator. And since then, we stayed at the upper band, and we have now even moved higher above this band, and we are now crossing down again. close to moving down below the upper band, this would be then a confirmation of this price situation and the timing situation at that point in time. So the daily have a highly chance now to see a confirmation from price and time. Again, I mean, we skipped it in April, so I don't know. I don't have the truth here on my table. That's the current cycle analysis following the daily analysis. I think that's wonderful. And even going back to Stan's analysis in the Cycles magazine, confirming the 40 days and the harmonic relation to 80. That's the daily. So now I like adding sentiment data into this kind of analysis. So therefore, two of my favorite data sets I'm using for sentiment analysis is long-term. It's the FRED, Financial Stress Index. We need to be careful. I think we have the fourth version out already. So this is an outdated version here. We need to get to the latest data. So this is the Financial Stress Index from the St. Louis Federal Reserve. Yeah, you can just look it up. It's published once a week, combining, I think, 17, 18 financial series data sets into this combined indicator, which we see here on the chart. You need to read it vice versa. So lows in this series are related or correlated to market tops, and vice versa. Market tops are correlated to bottoms in this series, and market lows are correlated to tops in this data set. So let's see where we are. Let's first remove everything else. This is the raw data, and we have one interesting weekly cycle here. We have the 190 weeks cycle, which is visible here. And you know, that's closely related to the 181 week cycle we saw in the S&P directly. So I would assume it's the same nominal cycle, just 1-2% difference in regards to length. So 190 weeks versus 181 weeks on the S&P, quite the same. It's also highlighted as second dominant cycle in the series. There's also the 100, which is picked, but let's first go with the 190. And this is now also, similar situation as we have seen on the weekly. So this cycle is topping, but to be honest, which would assume then this top here in the data, which is related to the low in March here. So that's where we had the stress index topping. Could be. So I mean that top. Then it defines the left translation of the low in the major S&P 500 to March, which is confirmed by the top here in the financial stress index, also coming in a little bit early, but let's make this bigger here. But I think we could argue, and this is valid, that this is the topping window here, and this peak then came into that timing window. So timing wise, this would be the March low in the markets, and then the rally started. So this indicates another longer up leg now to be expected in the markets into 2025. That's the same what we have seen on the S&P weekly cycle, right? So the financial stress and the long-term 181 week cycle now suggests a longer upswing, or financial stress will come lower. But if you look at the absolute values, there's also some risk. I mean, we are at the lowest level we've seen here for that data series. So I would not be wonder if we see quick, but it needs to happen now fast or very soon, to be honest. Another peak here in financial stress. We are still in that topping window. So if we see another peak shooting up here in that window, this would still be valid. I mean, we need to drill down to daily cycles, but from a weekly series, we cannot rule out that this still might happen. If we would have been here more this period, so let's say starting 2024 onwards, and I would say, okay, we should not expect another push upwards here. But in this period here, it's still be using carefulness. So, okay, confirmation of the same long-term cycles. And the good news is, I think this year we will see a very dominant low in the markets. I'm just not sure if the March low was it, or if we will see another down move this year before then maybe the final multi-year rally happens afterwards. So that's the key takeaway. And I'm now more interested into fine-tuning the cycle low. That's the long-term sentiment data using financial stress. Let's use another data set for daily analysis, which is the volatility index. So the so-called VIX index, which we also have as a daily series. Let me clean up my chart first. So this is the volatility index with latest data. You always see we have very low readings of this index as absolute values. So I think similar to the level here before the Corona crisis in the year of 2020. So very low levels, which are confirming to confidence in the financial markets. So there's no financial stress seen here from that daily data set. But let's see the cycles. And what makes this data series also interesting is that if you now have a look into the spectrum here at the bottom, this is a more complex spectrum now we really need to dig into. I mean, this is now not obvious which cycle to pick from these different detected possible cycle lengths we see here, really building a cluster between, let's say, 70 to 140. So there are 4, 5, 6 cycles we could pick with a similar amplitude, with all having a nice shape. So that's now where I would pay most attention to the AI-guided detection of cycles. We just have some ranking here in the right column, which refers to a lot of criteria how to pick these cycles. And so the most dominant number one scored cycle has a length of 73. I would assume it's anyhow that one here. So we have 73 trading days. You see the 73 now is again closely related to 80 trading days we had on the S&P trading days. Also related, and the 80 has a harmonic relation to 40 for the statistical significance Stan published in the Cycles magazine. This then would bring me to the possible cycle with trading days also detected here with 82 trading days. It's just ranked as the 8th, but it is ranked. So it is part of the most dominant cycles list, not the second, but it is in the list as it is highlighted in green here. And I will pick the 82 as we know first from the daily. It was on the daily. We know from the relation to the 40, it's in there, and 80 to 70 is closely related. So let's check how the shape of this volatility cycle changes if we add 2 cycles. So I will now activate the 82 and deactivate, and just have a look. Have a look, please, here at the tops and the bottoms of this composite cycle, which is shown here on the chart, right? So now on 2 cycles, 1 cycle, 2 cycle, 1 cycle. So that's interesting. You see that the shape or the projection of the next expected tops and bottoms, here also in the right area, now on, off, you see the amplitude changes, but not the projection in regards to timing. So that's interesting to use the 82 plus the 73. The timing, it looks like 1 cycle in regards to timing, so they don't phase each other out or do something different. So the timing stays different. And here we see we are in an upswing expectation of the volatility cycle, which could confirm a possible daily down move into the period into August, maybe the second half of August. You know, that a rising upswing cycle, so that financial stress or volatility could increase, which means that the stock index would move downwards, as you have seen from the daily cycle. So the conclusion of this kind of analysis now for the global markets is the do we have sound here? I just need to cross check what happens to. But I think here we have sound. Sorry for that. So the daily cycles, let's make a clear summary of this analysis. The daily cycles, S&P 500, volatility cycles, there's a reason to pick the 40 and the 80 trading day cycle, suggest a possible downward phase now into August, September. So for the next 4 to 6 weeks, the daily cycles show a potential downward pressure from cycles. Weekly cycles, on the other hand, suggest we are currently in the bottoming area. But we have no final confirmation if we have passed it already or another downswing that follows. So I would be careful with only using the weekly, as the daily now still has an downward swing around the corner until August, September, with the cyclic RSI confirming on the daily a possible top now. That's it. That's my reading of the current US stock markets in relation to cycle analysis using weekly, sentiment data, cyclic RSI, and some reasoning behind which cycles to pick and not to pick. So I hope that's at least the analysis I wanted to share with you today. I hope you liked it, have maybe seen something, what you see or what you not see, or got some ideas. And now I will put the attention to your questions. So let's have a live discussion. Give me a second to sort out your live chat. And lot of questions, but I will try to start from the top. So Edward, welcome. I think you have been here on time, coming into the show prepared with prepared questions. Thank you. This is really what I like. And because here's the place where I will invest the time to give you the answers. So also this goes out to everyone else who wants to talk about cycles. You meet me here Monday, same place, that time. Come prepared with questions. So let's get to your questions, Edward. So I need also to read it. I need to make my screen bigger. What is the science to build nominal model for a data set? Yeah, I think the idea of a nominal model still comes or goes back to Hurst, which researched different possible cycles, found different cycle length, which often appeared, and then he identified a range of a limit from minus or minimal and maximal cycle length, and then he said, okay, a cycle in this range often is there in this data set, and then it gets a nominal cycle, for example, with a length of 180 days. It's then called the nominal cycle, but it could be a cycle between 170 days and 190 days. So that's what we call a nominal cycle. A nominal model is then picking a combination out of these different cycles which could be there. And the heuristics goes back to the Hurst paper, where he proposed a nominal model for daily, weekly cycles, to be honest. But that's more a static way to look on cycles. So that's more the traditional or old school model coming from Hurst. I think what we are using here, Edward, and that's what you're following, is that we need first to identify the most dominant cycle, not following a static model. We use then digital signal processing to detect the most dominant cycle, like we did in the session, as always. And then, and I think there your question goes into it, then we use harmonic relationships to that most dominant cycle, and to pick then a second, a third, or fourth cycle. I would never go beyond picking 4 cycles for a nominal cycle model. Then it's becoming more like curve fitting. You can always pick a combination of cycles to fit to the past. But if you find 2 to 3 cycles which model then the past behavior, I think then that's valid. So use the most dominant cycle from digital signal processing. You need to validate that you have the real best dominant cycle. Therefore, you need to have statistical analysis, for example, what have been cycle lengths in the past. Therefore, like the article from Stan I just promised, or you have an idea about that asset class. Once you have that most dominant cycle, look out for rule number 2, look out for best harmonic relations. So a 40-day cycle has a good harmonic relation to 80 or even 120. So use a harmonic relation of 2 or 3, or even divided by 2 or 3. So that's the most important harmonic relations you should use or can use. If you find these cycles in the cycle analyzer, so look if you find a cycle length which it has an harmonic relation, then add it up to your composite nominal model. That's the main rule, up and down, so harmonics up and down. So multiply by 2 by 3, divide by 2 or 3. And then the second step is look for the second or third dominant cycle which is detected. So the AI guided algorithm helps you to pick the number 2 and number 3 dominant cycles. So it could be not an harmonic relation, it could be a secondary very important cycle to pick. And by using this approach, I think you will quickly find the most 2, 3, maximum 4 cycles that you should put into your nominal composite model then to use. At least that's the procedure I always use again and again. Yeah, and I think you gave this example. That's right. So if we have a cycle of 50 days, look for if in the cycle scanner you will find a cycle length of 100 days or 90 days or 110. I think then you have a harmonic related cycle with a factor of 2, or even go down divided by 2. I would not then again divide by 2. So I would just divide by 2 or by 3. Yeah, so I would look for 25 or divide 50 by 3. I think then you have 16 days would look. I would not divide 25 then by 2 again. Just go one calculation. Divide by 2, divide by 3, multiply by 2, multiply by 3. Then you have the nominal model for this relation. Yes, this relates, I think, to your question. What is the meaning of the values in the default FSC nominal model? Are these typical business day cycles? So thanks for bringing up that question. I need to explain it. I tried to explain it in the beginning, but you relate to, let me bring in the screen. Your question is related to the settings which we have here. And there is a possible way to, in the advanced, let me make this larger. In the advanced settings, you can activate the auto composite, which is a feature which allows you to automatically pick a combination of different cycles. I will now activate this in my application. And there is now this setting here, and I think that's where your question is related to. There is a nominal model which you can enter here and you can change it. So it's called the nominal cycles nearest fit model. NCNF sounds strange, but and it has a pre-configured length of cycles. So first, this is only related to daily cycles, the setting, and this is the standard setting of the Hurst nominal cycles model using trading days. So you need to change the Hurst nominal model, which is normally in calendar days, convert it into trading days, and then you will find exactly these 5 possible nominal cycles. That's the Hurst model. So the preset configuration we have brought in here, and by the way, this was coming from one of the community members also as a proposal. This is the static daily nominal cycles model from Hurst for daily cycles converted into trading days. You can change it, but if you can use that. So what now happens if you activate this? This model will look and check, do we have a cycle with a length of 376, 188, 94, and so forth in the list of detected cycles. So that's what is happening. And let's show that example here. I need to deactivate that here. So in the auto column now, we can now choose the NCNF, so the nominal cycle nearest fit, which is exactly the configuration I showed you a second before. Now I will activate this, and means that it will automatically look in the spectrum if the cycles which would fall into the category are there, and then they are picked. So you see it has picked the 96 and 2 other shorter cycles. And let's get into the settings again. So you will see, I cannot move it. So the 96 has been picked because here you have the 94. It will not find these longer 2 cycles here, but I think then 47 and 23 are also there. So and 46 and 23. So it has selected these 3 cycles automatically because these are 3 cycles of the daily nominal Hurst model which have been picked here. This is now the VIX index, so not the S&P. So would have been made more sense to use the S&P. But just to answer your question, Edward, that's how the nominal cycles model works. That's how the auto composite works. And this is where this nominal model is coming from. So we as FSC just translated the Hurst nominal model into that. Yeah. The API is a special subject because the API will move just forward in a special group. But let's talk one-to-one on that to use that going further. It's problematic to test in current format redraws a lot of during infections. So a story well. Yeah. For testing, so Edward, your question in general, so let me try to answer. The platform and the user interface is designed to make current data. I mean, you know that everyone can go back in time, just skipping some data if you align the right hand of your analysis into the past. I think you are all aware of that. So this is then out of samples. So you can do historical analysis, but it takes time and it is not designed to like this kind of walk forward testing automatic. So it's a visual approach to cycle analysis, which always includes redrawing. And I see your question. So keeping historical analysis more fixed, having maybe a correlation to tops and bottoms is something we need to improve. And for sure, you cannot do this in an automated way. So yeah, I can just confirm your statement. How it goes. And maybe you have a lot of questions, Edward. We could have a one-to-one talk today, but maybe one more question from you as you are well prepared coming into the show. So, and therefore I need to honor that. So can you tell us more how the AI used in the new cycles up where when the AI option is not selected? Because I think that's a valid question, which is interesting for everyone using that tool. I tried to explain it always, or sometimes, not always, but sometimes. So let's have a look at the AI guided detection. Let's switch to the S&P. I think it's more interesting to have the stock market in there. So let's remove the current analysis. Yeah, and we have 2 cycles picked here. So I need to remove your question to see the spectrum. So, okay. Good. The AI-guided algorithm is looking at different criteria in the spectrum. So, for example, there are different features, different data which help us to decide if a cycle from a spectrum is valid or is not valid. And I think that's one of the most important questions for a cycle researcher. Which cycle should I pick from the spectrum for a nominal model, for a composite, for forecasting, so for different reasons. And we are always sitting in front of this kind of spectrum or even different looking spectrums and really need to decide which peak of that spectrum should now be picked for our analysis. And there, I mean, you can have 20 years of experience and have derived your own rule set, but this would require a lot of experience and a lot of usage. So the AI-guided technology now takes into account different measurements or different criteria how to measure it. So let me explain you from the visual shape of the spectrum some criteria. One important criteria is that what I always call sharp peaks. Sharp peaks means that the visual shape to the left and to the right, they fall down very sharply behind that peak. So it's completely the opposite. So what you see here, so this is a flat peak. And if it's a flat peak, it's a bad shape, or it's not a good reason to pick. If you have a very sharp peak in the spectrum, it's good. But this is a parameter you can't read from the pure amplitude of the cycle or if they're a top. So this is really related to how the shape of a peak in the spectrum looks like. So we need additional, and you can do this by visual inspection. That's why I think it's always important to look at the cycle. But this is the AI, what the AI engine is doing. So you could think about it's a computer looking at the image and looking at the shape of these peaks in the spectrum, which is not the height and how to the left and to the right. So it's the shape. Another criteria is that we have a lot of freedom. So once we have this peak here to the right and to the left, we have a lot of freedom to both sides of this peak. So it's not interfering. We don't have another peak shooting up to the same height to the left or to the right. So this is a second criteria. So this peak is really freed up to the left and to the right. There is no other peak around that. So that's a second visual criteria, which the AI algorithm takes into account from looking just how the shape looks like. And then it's also looking how many cycles, and for example, just looking at these two cycles here are peaks in the spectrum, but they, from just looking from a visual shape here, they would not qualify to get a composite reading. So the visual shape is one important factor the artificial intelligence is putting into account. And as each spectrum looks different, there's not a fixed rule set. So it's also relative how these cycle peaks are relative to each other in the spectrum. So that's why really visual inspection of a picture. So it's like detecting an object in a picture. So how do you know that before you is driving a truck or that this is a traffic light? So this is learning to read a picture is like what machines are now very good in reading. So, and we use some kind of these aspects to read the spectrum now. And this goes into this scoring, which then ultimately here to the right comes to the ranking. We combine that with our favorite statistical measurements like the Bartel's score. So the Bartel score is statistical significance. So it's just a pure mathematical testing of a specific cycle in the data set. And if this Bartel score is good, it counts as another positive measurement for picking that cycle. And then we have the cycle strength. That's the impact of an individual cycle on the price movement of the underlying data set. So if it has a high strength, it looks like that this cycle is also really valid, or at least relatively more valid, because cycle price is more moved by this cycle compared to another cycle. So these are more relative measurements which need to take into account. So now, summing this up, we have mathematical data like the amplitude, a top really seen in that spectrum. We have Bartel score, statistical significance. We have the strength score. This is pure the visual shape of these cycles, which I just had a hiccup here, which then combines within the artificial intelligence and brings back the overall ranking from the AI score. So, Edward, and I hope this tries to help to answer your question how the AI is selected. And by the way, it's nothing more. So you will see the same cycles. So the list of cycles here on the right will not change. Yeah, if you have the AI activated or not. It's just if this ranking will be highlighted. So the detected cycles will not change, but it gives you guidance which ones to pick. So see this more as it's an assistant. Let's call it an assistant, which helps you which cycle should I pick from that list. So it's kind of, some colleague has explained to you, it's kind of my brain sitting next to you. So you might have maybe no clue which cycle to pick. And we would have a discussion maybe last which cycle to pick. Now you don't need me anymore. Yeah, the AI, artificial intelligence, has been trained by me how I pick cycles from the visual shape with different parameters. So just push on the screen and it's like sitting my brain on your shoulders, which helps you then to give you guidance on picking the cycle. It will not pick the cycle, but it will guide you which cycle to pick. So we think that the AI procedure is a big help to anyone picking that. And Edward, finally, I know you are interested in also in automating cycle detection processes moving forward. So the first thing is helping the users out there using the tools. The second topic is, as we now have this technology helping us to identify the cycles, we can start to automate. As always, you should understand what artificial intelligence is doing if we now go to the next step. So therefore, these kind of episodes are also important to always explain what the machine is doing, because in some months now moving forward, we will use this to even automate the composite cycle model based on AI-guided principles. So, Edward, this is lots of your questions. Maybe related to that, smiles are good. Why would the AI not have picked the two blue cycle peaks at the left of the 181-week high on your S&P chart? Let's get back to that. Let's try to find it. I will go to that chart. That's the weekly chart. Let's clean it up. I think your question is the blue. Okay, so your question is, I would assume, related to these two tops here. So why the AI have not picked the two blue cycle peaks to the left of the 181. So this is the 181, which has been picked, but there are to the left, these two have not been picked. And that's, I think, your question. So let's zoom out a little bit. The second one which has been picked was this longer term cycle, but nothing in between here. So that's now when AI comes in. The AI algorithm does not really explain it to me, but let's have a look. I need to pull back your question. That we can see the full chart. So, I mean, that is obvious. This one is picked here due to the shape, the height of this picture here. I think the reason here for that, I just only can guess what are the rules. We need to look into more details here. Okay, I can't paint here. Wait a second. So let's try to paint something here. So I think that the cycle peaks for these three come more or less in close relation. So there's no easy rule to rule out which of these three cycles should be picked. At least these two are quite similar in height here. And if you just measure the downswing, this is not so much compared to this longer term downswing we see here. Well, I need to zoom out. So, but that's what I would assume. And the blue also suggests we have the blue also suggests that we have I want to clean it up. Here now. No, stop it. Stop painting. Yeah. The blue also suggests that we have a lower Bartle score. and the closely related, these two cycles are closely related, 104, 120, two closely related, lower Bartle score. We have on that level, we have more than just one cycle. So if you see here, if you draw a line at that cycle length here, you would see that there is 1, 2, 3 possible cycles for that amplitude. So it means how do we differentiate that we have 3 cycles? And even though this is a longer cycle, it has a smaller strength. So I think that at least it's a short try to explain that there are different conflicting criteria which would make these 3 cycles not really related compared to the 108 one. There's clearly a difference. And then we have huge difference, and also you see it from the haze here. I think that's the second level here, which is then green. So it is a green cycle, high Bartle score. And there is, there's nothing to the left. So we have very clean period here to the left to that cycle. So that's at least my explanation why these 2 or 3, even to the right, have not picked. So there's the distance is not enough between these cycles, and that's why it clearly preferred that cycle in between. And maybe the offset even between 140, 180 is not enough to pick this in addition. So it makes a clear proposal, use the 181 week cycle. Don't use the other ones. That's a suggestion. You don't need to follow that suggestion, but that's my try to explain it. Okay, next question. Lars, have you found in your development of this tool that the tool has a better accuracy of picking cycle lows more correctly and frequently than pick tops, or vice versa? Yeah, I think that's a good question, but I think it's not related only to the tool. I think that's a general discussion we could have related to cycles, because a general rule of thumb that's also related to our software here as the foundation is that cycles are more visible at cycle bottoms, so at cycles low. That's where all cycles come in synchrony. At cycle bottoms, they really come visible, this synchrony of cycles. That's also a finding not related to the tool. That's in cycle research one of the most a valid finding. Try to align cycle lows. They become the most visible. So it's not about the tool is better in detecting. It's a general assumption that cycle lows are better aligned in markets, as cycle tops from different cycle lengths might not pop up at the same time. So the synchrony is mostly seen in cycle lows. So therefore, it's always easier to forecast cycle lows when different cycles align across different time frames. Edward, you're right. The RP, the docs button is not there. You might know we have moved into the cycles foundation. So I hope we have finished 80% of the transition from the transition into the foundation, but there might be broken links. We will follow up on that. And Edward, please excuse I will not go into your API questions because this is a special subject I don't want to discuss here on the Monday channel. Star Lord, I think you're coming from the question where I showed from the Bitcoin analysis, this count or the pattern where you see 5 tops followed then by 3 cycle lengths to see the major bottom, where I did the analysis of this pattern in Bitcoin. I have not done the analysis if the S&P has a similar pattern. So I would recommend someone needs to do that research. I have not done it on the S&P, so I cannot come out with an answering for the S&P, but it would be a good research question. And I have discussed this count also with Elliott Wave fans, where there are similar counts to complete a Elliott Wave pattern. But I'm not an expert on Elliott Wave, so I cannot really give some guidance on that. I can just say in this channel here, it's worth researching if there is a pattern. And if someone comes back with some ideas or findings, even here into this channel, I will dedicate some time here on Monday to it. So Starlord, if you have some charts to share or some findings on that, if you're prepared coming into the next Monday, I will dedicate some time on it, or applies to everyone else who wants to bring it in. Brent, been wondering if we might get a 100-week echo from the March 2020 low. Yeah, that's interesting. So March. Let's bring up the chart here. So we have here's the weekly chart. Oh, this drawing tool is a mess. Okay, get rid of that. So this is the 180-week cycle here you're talking about. And if we zoom in, and you're talking about the March 2020 low, which is, I think, here. Here, which has now, I think that's the that's the cycle low here. So a left translation, but this would then an upswing, which this returns. We have another huge upswing in that market, right? So this is the echo. You might, yeah, that's from a weekly. That's possible if the weekly is confirmed. As said, I just want to have the possible next down phase ruled out from the daily chart. So I'm waiting until September. Maybe I'm missing out again, another upswing. But staying neutral is also an important capability. If you're not sure, just don't trade. But everyone needs to make this decision on it. But interesting analysis, Brent. Thanks for putting that relation up for the 180 weeks. Oh, yeah. I like your question, Edward, or at least your... But I mean, I don't know if everyone can follow. How about including the AP index and crypto volatility index as sentiment tool? Yes, so the AP index is something which is related to the solar system and the solar forces and the geomagnetic forces, which is coming from around the solar system, and the geomagnetic indices, which is the AP index. It's an index for geomagnetic activity. It's very interesting to analyze cycles in geomagnetic activity in the solar system impacting the stock market. But it's a very special subject, Edward. I know what you're talking about. It's public data, so the good thing is it's public data, so I really need to rethink why not bring it in. I agree. And the crypto volatility, that's easier to do. So thanks for bringing that up. So the crypto volatility is definitely something we should bring in. I'm just writing it down for me. The AP index, I think we need to have a special seminar what the geomagnetic activity is about. But I like where you are going into. Yeah, where can basic subscribers access the cyclic RSI? So the cyclic RSI is embedded in the platform. But we, at least the automatic feature, we limit it to our professional analyst subscribers to make it easy. In addition to that, I have written different articles about the cyclic RSI and made available different calculation routines, for example, in TradingView and other platforms where you can use the public RSI for free. I published this indicator, just the automatic cycle detection and putting the automatic cyclic length into it. This is what you need then to do manually on these platforms. So I would propose, Brent, reach out to me via the Cycles contact. I will guide you and give you some hints where to find the cyclic RSI on other platforms. It's not secret science. Just the automatic cyclic detection is for our analyst members to make it as easy as possible. Now the Elliott Wave experts come into play. Yeah, Elliott, so as said, unfortunately, I'm not the Elliott Wave expert here in counting these numbers. Therefore, now we need to have a team meeting and discuss your analysis, but this is a stream, so it's hard to get it. I would like to have a discussion on your comment here in the group, because I'm maybe not the perfect one to answer that. But I would listen to the community what you would talk about this idea from Elliot. So feel free to follow up maybe in the discussions below the video. And maybe it really comes to, Ahmed, your topic. Don't you think it will be nice to arrange an in-person meeting so we can all meet around the table, know each other more, any future plans somewhere in Munich? You're coming from Germany, aren't you? At least related. That's just related to the comment just a second before. I think now we are getting deeply into the pros and cons from cycle analysis. And this is where this stream gets beyond what we do. So, Ahmed, if we find a group in Germany, let's start that way. I would be happy to host an on-site meeting in person in Germany. That's easier for me for traveling. So this could be organized as a quick community meeting. And if you have an idea to ramp it up, or if we find enough German viewers here, I would be happy to support a German in-person meeting. I would prefer maybe in the northern of Germany, so Hamburg, Berlin sounds better to me. From an international perspective, what we're trying to do in our analyst group is that we bring together you in these virtual meeting rooms in person. So we have in our pro analyst community, if you want to join the professional level, this is where we meet twice every 2 weeks. We meet every 2 weeks, twice a month in virtual meetings in the Pro Analyst group, just virtually, and it's really around the globe. So if you are interested in having this group discussions, we do this in our Analyst Pro version of the membership, where me, Richard, other board members join with community members every 2 weeks. It's not in person. I mean, it's in person virtually. So, Ahmed, yes, I think that this is the limit of a live stream. Where we are now touching the limits. So streaming over an hour now, and I think your questions are now going beyond simple cycle analysis, which I really like. Let me try to conclude and end today's session. So you've seen the daily, weekly analysis on the S&P, something very important to watch out. We have discussed the same thing, a lot of questions, and I would love to see if you come up to this session prepared with your questions. So thank you, Edward, for bringing in these questions. You see, I will dedicate the time sitting here in front of this session to your questions. So if you really want to bring in your question, this is really the place. I cannot pay attention to all emails and what's rushing in. So if you want to discuss something with me, which might be public interest, join live. So hope to see you again Monday, same place, same time. Let's do some cycle analysis. Have a safe and nice week. See you again. Bye.